Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
Welcome to the Statler Financial Radio Show, and happy Valentine's Day weekend to everybody tuning in. I'm Stephanie Griffin, celebrating love and finances with president and founder of Statler Financial Services, Philip Statler. Philip is the retirement planning professional who helps make retirement dreams into reality. Good morning, Philip. Happy Valentine's Day weekend to you and your wife. How are you?
Hey, I'm doing well as can be expected. It's a fun weekend, right? To celebrate love is in the air and Valentine's Day and all that kind of stuff. So
That's right.
Excited about the weekend.
Do you have any favorite memories with your wife for Valentine's Day?
So I was thinking back, one time I decided I was going to cook dinner, right? And I wanted to do surf and turf. So I wanted lobster.
Ooh.
Yeah, the turf part's pretty easy. I can go get a steak, and I knew what I wanted, some ribeyes. So the issue was finding the lobster.
Oh, no.
And I knew there was a grocery store in town that used to have live lobsters in the tank that you could go pull out what you wanted and set to go.
Right.
And so I couldn't remember which grocery store it was. So I literally went to every grocery store, and of course the one I thought had them, well, we used to have them, but we don't have them that way anymore.
Right. Uh-huh.
So I ended up going to another grocery store. Finally, I found one that had just a couple lobsters left.
Oh, thank goodness.
So I was able to prepare this luscious surf and turf dinner.
And it turned out okay?
It turned out fine. I was a little scared about the lobster because I'd never done, live crawling around lobsters before. But yeah, it worked out. I was, steaks, not a problem. I do those all the time. But lobster, that was a first for me. So
oh, my God.
it came out okay, which was good.
Did she know of the amazing effort you put into that? I mean, did she know you went to different stores?
Yeah, no, not really. Not really.
And
for us, Valentine's Day is not, we don't do a lot usually for Valentine's Day. I mean, birthdays, anniversaries, those are, those things we'll do a little bit more for.
Sure.
But Valentine's Day, this is just one I was trying to make really special. I thought I'd do it myself.
I love that.
It was successful, but it was just a little stressful.
I bet it was. I bet you were glad when that meal was over. Well, I'm glad you guys have a good memory from that. And, a lot of couples look forward to spending their golden years side by side, not just Valentine's Day, but all year round. But do couples usually retire at the same time, Philip? Is that something that's common?
Well, I'm going to say most couples actually don't retire together. Statistics say about 62% retire at different times, which lines up with a lot of what I see within our firm, that, there's a lot that, and sometimes, Stephanie, that's because of age differences, right? We've got a younger spouse, and so that spouse doesn't qualify for Medicare yet, which is a big thing that, we need to be able to cover our medical insurance part. So that seems to be a big deal there. And then life circumstances, like, job changes, age gaps, health issues, all those things play a role in when you're going to retire. And then I think another big part of that is having that open conversation and planning makes the transition much easier and helps keep couples really kind of stay in sync, even when their retirement dates don't really match up.
Right. Well, what are some of the financial challenges that couples face when they retire at different times?
Well, I think that retiring at separate times, it can create this staggering retirement stress, right? Whoever's getting ready to retire, that's stressful because it changes, a lot of change when we get ready to retire. And so each person has to go through that kind of on their own and walk through that. And, couples might need to adapt their budget as one income drops off and things change. So spending priorities have to shift and that kind of thing. It makes it harder to say, hey, look, I want to, retirees a lot of times want to take off a big trip here, take off there. So sometimes we can't really do that yet. We have to do a little better job of planning so that the non-retired spouse can make sure they can take that time off to go. But you can make it work smoothly. It's smart to plan ahead together and just keep the communications open about money and, how that's going to affect the retirement as one retires and then the other.
Well, let's ask that question then about communication. Why is communication such a crucial part of retirement planning for married couples?
Well, it's really essential because financial assumptions can really cause conflict, right? We don't want conflict as we're heading into retirement. It's supposed to be one of the funnest times of our life.
Exactly.
So couples who talk regularly about their plans are more likely to kind of work as a team to make it happen. And then setting goals, checking in often helps really keep everyone's expectations realistic and really the relationship strong. So that's really, I think, the part of it is that you just have to be always talking. So folks, listen, hey, retirement's a big deal. I want to help make sure that you've got everything put together the way it needs to be, that your plans are complete. Give us a call and let's start that process today. 863-877-1188. That's 863-877-1188 to really start that process to make sure that you can have that retirement you always dreamed of.
And if you are just joining us, we're celebrating Valentine's Day weekend here on the Statler Financial Radio Show with founder and president of the Statler Financial Services, Philip Statler. Philip, let's talk a little bit about Social Security. Some couples are surprised to learn that Social Security treats married folks pretty generously. So how do spousal benefits work with this?
So even if one spouse didn't work outside the home or earn less, they may still qualify for Social Security based on their partner's work record. So the spousal benefit can be up to 50% of the working spouse's primary insurance amount. So that they call that the primary amount. So that primary insurance amount can be adjusted based on when you decide to retire and start drawing Social Security. So, it helps ensure that both partners have some income in retirement.
And when is the best time for a spouse to claim Social Security benefits? And why does the timing even matter?
Well, timing makes a big difference because to receive that full 50% spousal benefit, you generally must wait until your full retirement age, which for most folks now is 67. So if you claim earlier, like 62, well, that permanently reduces the benefit. So it pays to be patient if you want to maximize that Social Security amount.
Patience is not always my virtue. I got to work on that, I guess. Can someone who's divorced still receive Social Security benefits based on their former spouse's record?
Absolutely. If you were married at least 10 years and you have not remarried, and meet some age and timing requirements, you can claim Social Security spousal benefits on an ex-spouse's record. Now, this doesn't impact your former spouse in any way. They keep their own benefit and they're not even notified at all.
Philip, is there a way for married couples to coordinate their Social Security strategies for the best outcome?
Well, I think you treat your Social Security benefit as a shared household resource rather than individual payouts. By coordinating when each spouse claims, couples can really help maximize their total income over their retirement and potentially strengthen their financial situation for the years ahead as we continue to build on that, Social Security. That's a big deal. That's a big part of a lot of folks' retirement income.
So, Philip, why might somebody not want to take Social Security at age 62?
Yeah, that's a great question. And a lot of times we see folks wanting to take that Social Security at 62. So let me just kind of lay it out for you, because I think that most of the time, when people start to look at that, they haven't really thought through the whole process, because it's a big deal when you get ready to retire. And if at 62, you are literally retiring and taking your Social Security, health insurance becomes a big deal. You haven't qualified for Medicare yet. That doesn't happen until you're 65 years old. Even if your spouse is on Medicare, it doesn't allow you to join Medicare until you hit the age of 65. And so one of the big reasons that I see folks not retiring at 62, it is because of health insurance. It's so expensive to get it outside of an employer, and definitely more expensive than Medicare. So that's one of the things, and one of the reasons we run so many different scenarios to determine when's the best time for somebody to really take that Social Security benefit. You know, folks, this is Valentine's Day, or Valentine's Day weekend anyway. Why not give your spouse a gift of confidence in your future? If you have at least $250,000 or more saved, schedule a comprehensive retirement planning session for the two of you. Manage the challenges of different retirement dates, unlock the maximum for your household Social Security benefits, build a spending plan for enjoying more life together. Give us a call, 863-877-1188. That's 863-877-1188. Don't wait. Let's make sure that we are all on the same page and ready for the retirement you always dreamed of. That number one more time, 863-877-1188.
And what an amazing Valentine's gift that would be, I'll tell you. Don't hesitate to reach out to the Statler Financial Team today, 863-877-1188, and the Statler Financial Radio Show. We'll be right back. Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor. Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show with founder and president Philip Statler. I'm Stephanie Griffin. Thank you so much for listening today. Market volatility isn't a question of if, but when. But here's the truth. With the right preparation, market corrections don't have to derail your financial future. Philip, let's get started with fundamentals. Why should every investor, regardless of their age or portfolio size, have a plan in place for market volatility before it happens?
Well, I think a couple of things. One is, I think you said it just a minute ago, it's not, if it happens, it's when it happens, because we know historically it's going to happen. We just don't know when. So a couple of things that we need to make sure that we are ready when it does happen. Emotional decisions during downturns can be wealth destroyers. We saw that in 2008, where people bailed, when we call it capitulation. That's when everybody starts bailing out of the market instead of holding tight because they just can't stomach it anymore. So emotionally, you need to make sure that you've got that tied down. How much are you willing to hang in there? Corrections happen on a regular basis. Now, correction is when the market drops by 10% or more, but less than 20%. 20% or more, we start to call that a bear market. It's more than a correction. So they're going to happen on a regular basis. And so having a plan helps eliminate those panic-driven mistakes And that's where having that retirement income plan in place, knowing where your income is going to come from, and making sure that it is a little bit more protected than the rest of your accounts goes a long way to helping you weather those storms. So preparation allows you to see opportunities too, not just the threats that come when the market declines.
And if you'd like to talk to Philip about your portfolio, you can do that by calling 863-877-1188. That's 863-877-1188. And yeah, we've seen it happen. We've all seen it happen. Investors who seem to have everything figured out suddenly make devastating mistakes when markets get rocky. So what are some of the most common and costly errors you see people make when they haven't properly prepared for market volatility?
Selling at the bottom to, quote, stop the bleeding. At that point, if you're at the bottom, you might as well ride it out. A caveat, right? As long as you've got a well-diversified portfolio. Now, if you're in all, penny stocks or something that's very, very risky, well, that's a different story. I'm talking about people that have a well-rounded, a well-balanced portfolio. Then those companies are good, solid companies. They're going to weather the storms like they have for years. So that's one. Moving everything to cash and missing the recovery. I got to tell you, I saw this last year. Stephanie, I had a client come in and say, look, I'm concerned about the election. I'm concerned about what's going to happen. I want to get out of the market. I want to go to cash.
Oh, wow.
I said, okay. So I let him think about it for a little while, and I gave him a couple other scenarios.
Mm-hmm.
Why don't we liquidate half and leave half invested? Well, he called me back and said, no, we talked about it. We just want to liquidate everything. Let's put it in money market. Let's see what happens with the election. And what happened? The election hit, markets bounce, and it's tough to get back in to the marketplace. So just an example of where we see it happen. Abandoning your diversification. Like I said earlier, all this relies on having diversification within your accounts. And that's a big deal. And then letting fear override your long-term strategy. The younger you are, the easier this is because you got a lot of time left. The closer you get to retirement, that's why we need to start making adjustments to what our accounts look like before we get to retirement. I would say 5 years before retirement, we need to start looking at those accounts and making adjustments so that we don't have too much risk in there for retirement time.
Well, some investors think they can actually wait until they see trouble coming and then make adjustments. I don't know about you, Philip, but I don't know how to time the market. And I know that's pretty difficult. So what makes it so challenging to predict when volatility will strike or when stocks will go higher? And why is waiting until it happens such a risky strategy?
Here's the deal. Nobody knows, what the market's an emotional machine. A lot of times it's emotion that drives the market. Yes, the traders out there, the people that do this for a living, they're looking at, either charts or technical analysis or fundamental analysis or all those things. But you can throw those things out the window when emotions hit. And so we don't know when the next thing's going to happen. Right. And just because the markets are down doesn't mean the stocks in your portfolio down. You may have stocks that are, counterproductive. They may go the other direction. So you just don't know. Just because the market's down doesn't mean your account's going down. I see that all the time. And so you just need that to make sure it comes down to those couple things, Stephanie, making sure that the risk in your portfolio overall matches up with the risk you can handle. And we saw this back in 2008, where people thought they were a moderate investor. Unfortunately, a moderate portfolio back then lost 15 to 20%. That was way more than the moderate investor thought they could lose. And so they figured out real quick they weren't really moderate investors. The problem is they found out too late. We want to find out ahead of time what kind of investor you are so that we can pick the right kind of portfolio. And that helps with that whole process.
You are listening to the Statler Financial Radio Show. You can go to his website, statlerfinancial.com, find out more about the services that they have, and you can also give them a call, 863-877-1188. Sit down with Philip, talk to him, have that free consultation, 863-877-1188. Now, Philip, you've helped a lot of clients prepare for and navigate through various market cycles. For someone watching who's thinking, I know I should prepare, but I don't know where to start, how do you help people build a comprehensive volatility preparation plan? That's a mouthful.
Well, that is a mouthful, and but it's a good point to make. And I guess really, Stephanie, it starts with understanding the amount of risk you can handle. And we've got a couple tools that we use here at Statler Financial to help us ascertain what that number is for you on a scale of 1 to 100. What does that look like for you? And so we plug that into our system and build our portfolios around that. And we can show you, look, based on your risk number, if we had another 2008, here's what it would look like for your portfolio versus what your current portfolio looks like. If another 2008 happens, here's what your current portfolio would look like. So sometimes that helps people understand what the differences are between different portfolios by, when we run those big booming situations, what could happen. And so that really helps them get a better picture of risk and how it affects their portfolio.
Since every investor has unique circumstances, risk tolerances, and goals, can you walk us through the kind of personalized volatility assessment you can provide for clients?
Absolutely. And that's really our core retirement design, Stephanie, is that process where we'll sit down with folks and make sure and actually run a risk analysis on their current portfolio to see, okay, what is the risk in that portfolio on a scale of 1 to 100? We run you through an analysis to determine what your risk score should be. And then we compare the two. If your risk number is a 52 and your current portfolio is at 75, well, there's a big mismatch there. And so we need to make sure that we get on the same page, that our portfolio and our risk tolerance are on the same page. And that's really what we strive to do here at Statler Financial.
Philip, can you walk us through the process at Statler Financial Services and tell us a little bit more about that?
Absolutely, Stephanie. So we start with a no obligation, a 30-minute phone call. That 30-minute phone call is really where you can ask us questions. We'll ask you questions. We want to see where you are and what your ultimate goals are. And if you're on the right path to get there, God bless you. We're going to let you know that, or we're going to encourage you to do a couple things and set you on your way. If I see a place where I think I can help you, I'm going to let you know that. Hey, look, I think that we could help here, or I think you're off track there. And then we would sit down together in the office and go over, or by Zoom. I can do Zoom meetings too. And we'll go over where you are and collect the data that we need, statements, tax returns, all those things to put together a financial plan for you. And by doing that, then our next step really is we get to work and we run the risk analysis on your current portfolios. We also then get what your risk assessment looks like. From there, we look at the fees and expenses you're paying inside of there. We move on to taxes. We prepare a tax plan and see, if there's any opportunity for you to be saving in the area of taxation. And when I say saving, I don't mean saving just for today, but I want to save you a lot of money over your retirement lifetime. And so sometimes, Stephanie, that means we pay a little bit more tax today and tomorrow in order to live tax-free the rest of our retirement. So that's the second leg of our planning process. The third leg is putting together that income plan, showing you where the income's going to come from, how we're going to get the income we need. And then the big number is, how much income do you have to spend? We'll come up with all of those things in the third leg of our core retirement design. So when you're done, you have a risk analysis, a tax analysis, and an income plan, all put together for you, ready to go. And so that's really our core retirement design. Again, we want to help people have the retirement they always dreamed of. It's a simple phone call to get started. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your 30-minute phone call. Or you can go to my website at statlerfinancial.com. There's a link there that you can click and schedule a time as well. I look forward to speaking to you soon.
And we will be right back, and we're going to be revealing specific strategies for building your volatility defense system and the critical mistakes that could leave you vulnerable when markets turn turbulent. The Statler Financial Radio Show will be right back.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit statlerfinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back. It's the Statler Financial Radio Show. Let's get into the specific strategies that can help protect your portfolio and your sense of reassurance. Philip, what does a well-structured volatility defense system actually look like? It sounds so stealth or something. I don't know. And how can it help protect investors when markets become turbulent?
Well, I think one is, your core holdings need to kind of have some stability. So you've got a core portfolio that's going to kind of be the bread and butter that's going to be there, all the time. And then we have growth positions to help combat inflation. The one thing I know is as I talk to people all the time is, I don't want to be in the stock market. I'm going to tell you something. When I have 90-year-olds, that we have at least 10% of their portfolio is in the market. Why? Because it helps combat inflation. And we know inflation has been pretty bad here the last few years. And so this is one area that can help offset some of the inflation. And then having some protected income generation strategies. There are dividend portfolios that you can put together that would have some specific, allow you to throw off some specific amount of income. There are annuities out there that will give you an income stream for the rest of your life. And those can be beneficial. That way you don't have to worry about the ups and downs of the market. If they go down, it doesn't matter. Your income's not going to be affected. And then the last thing I think that people, I think they know they need to do it, but they want to retire early, so they don't care. And that is, folks, you need to optimize your Social Security benefits. You really need to do the math to figure out when is the best time for you to take Social Security. I understand if health is an issue and you need to retire at 62, but there's a lot of folks out there retiring at 62 or taking their Social Security at 62 and still working, that it is not a good idea to do that. And we need to look at why it's not a good idea. And we need to look at how can we do better and protect our spouse. And there's a lot of things that go into optimizing Social Security. It's not just the dollar amount that's there when you start drawing. And those are the things that we look at and talk about when we start talking about optimizing your Social Security benefits.
Now, there is a fascinating psychological component to market volatility. How can investors prepare themselves mentally and emotionally for the inevitable stress that comes along with the market downturns?
It's hard to really, kind of get that psychological component put together. Because so many people live in fear. And so when the market starts to drop, they fear creeps in and starts to really take effect, right? So I think if we look at a couple of things, one is understanding your true risk tolerance before the crisis hits. Like I said earlier, people in 2008 found out they were not moderate investors too late after their accounts were already down 15, 20%. And so understanding what your true risk tolerance is before a crisis hits is a huge deal. It really, truly affects how you should be investing your money. Other thing is maintain historical perspective on the market recoveries. I mean, if you look back, I can go back to 2000, right? One of the first major bear market I went through as an advisor. And what we have seen both in 2000 and 2008, if you had a well-balanced portfolio, well-diversified portfolio, it basically took you 4 to 6 years to get back to even. And so you need to have that perspective on market recoveries. Now, we've had some, right? The COVID bear market was a flash in the pan. It was down 30%. In 6 weeks, we were back to where we were. So it does happen that way. Corrections, we have a 20%, 10% correction, and, within a couple of weeks, we can be back up. So markets recover. And then we need to have a written plan, because that will help us reduce the emotional decision-making that we're trying to do. Having that written plan that we can go back and look at is a huge deal. And then bucket planning, putting your different accounts in buckets. This is the bucket I'm going to draw from day 1 retirement until day 10 of retirement. Then I'm going to go to this bucket. So having the bucket approach can really help us plan out how we're going to use the income, and lets us put part of it, that last bucket we're not going to touch. If it has ups and downs, it doesn't really matter, because we don't plan on using that bucket anyway, except for emergencies and to leave to our beneficiaries. So that's part of the planning process there.
You said bucket planning. I thought we were adding to our bucket list. That meant. All right, let's address something that keeps many investors up at night: the fear that this time the market won't recover the way it has historically. So, Philip, how can investors balance learning from history with preparing for unprecedented events?
Well, I think that one thing, we diversify beyond traditional assets. If we look at some of the other models out there, when it comes to endowments and those type of things, how do they invest their money? They use some non-traditional assets to help when the market gets a little rough. Stress testing. I mentioned this earlier. Stress testing for various scenarios, taking your current portfolio and looking at what would have happened in 2008 if I had this current portfolio right now. Gives you some sense of okay, I can handle that, or no, I can't. We need to make changes. A big thing is this, Stephanie, you need to focus on what you can control. Tax strategies, Social Security optimizations, diversification, and then maintain flexibility to adapt. That's huge. We got to be flexible to be able to make changes. All of this wrapped up is our core retirement design. I'd love to sit down with you, talk to you about it, see if we can help you develop the retirement plan that's going to give you that retirement you always dreamed of. Give me a call at 863-877-1188, 863-877-1188.
And you can also text VISIT to that same number and contact Philip at Statler Financial Services, 863-877-1188, and get in for your complimentary visit. Now, we've covered a lot of ground today about preparing for market volatility. For listeners who are realizing they may not be as prepared as they should be, what kind of comprehensive portfolio review process do you use to address volatility vulnerabilities?
That's a lot of V's in
There's a lot.
Yes. Again, the first component of our core retirement design is really identifying and measuring the risk you have in your current portfolio. And that's going to give us, based on that number, we will know how volatile your portfolio could be. And so from there, we have kind of that view of here's what it looks like. Here's what it would look like in 2008. What do we want to do about it? Are you comfortable here? If not, here's some suggested changes we might want to make to make sure that we're okay on that front. It's planning. If you have a plan in place and the markets are going to go up and down, or maybe they go down and up, but they're going to be volatile. And if you're ready for that and you're mentally prepared for it, then you can weather those storms. And having that plan in place is a big part of it, Stephanie.
And, every investor situation is unique. We talk about that all the time on this show. So how can you create a customized volatility preparation strategies that align with each client's specific circumstances?
You're right. Everybody comes in with a different set of assets. They all have different goals. They have different concerns about what volatility looks like in their life. And so it is, again, and I feel like a broken record sometimes. It's putting together that plan, having that plan in place that will, really allow you to invest properly, understanding the amount of risk that you need to have in your portfolio to grow, but yet the amount of risk you need to be comfortable with. And I think that's really the bottom line is getting folks comfortable with the risk. And some people honestly never get comfortable with the risk. I can't tell you, I've got several clients that will say, I don't like the market. I know you do. I don't really necessarily like the market, but it's a tool that we need to use. And they trust that we are doing what's in their best interests, which is why we're meeting with them, why we're making changes to portfolios and making sure that they're in the best possible position they can be in. And that's all part of the process. You have to meet with people. You have to assess their fears, walk them through it so they understand where they are, and let them ask questions. And the questions they ask are huge, and being able to educate them on why it's important is a big part of what we do. And it's part of what we like to do, is we want our clients educated about why they are in what they're in, why we're using these tools in these certain ways to get them to where they need to be. And that's what it's all about, helping people be comfortable in retirement. I'd love to help you. Give us a call at 863-877-1188. That's 863-877-1188.
And that's what I love about you at Statler Financial, Philip. You let people go in, you talk to them, you don't talk at them, you help them understand, and if they have questions, you are happy to answer them. So please give him a call for a sit-down, a free consultation, 863-877-1188. And the Statler Financial Radio Show will be right back.
Do you have a retirement plan but would like a second opinion? Call Philip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815.
Surprise parties can be fun.
Surprise!
Financial surprises? Not so much. Especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back to the Statler Financial Radio Show. If you've heard anything on the show today, or if you have any questions, call Philip and his team at 863-877-1188. That's 863-877-1188. Or you can even go to his website and see what Statler Financial is all about. It's statlerfinancial.com. Planning for retirement can feel like a big deal, right? But who better to learn from than people who've actually done it? So today, Philip Statler is here to share 5 super simple retirement planning tips from real retirees. These are straight from people who've been there. Philip, what is tip number 5? Right out of the gate here.
So tip number 5 is really, it's simple for me to say it. It can be hard to do. And I get that. I understand. But tip number 5 is live below your means. So spend less now so you can save more for later. It will balance out. You know, it is kind of about balancing, not sacrifice. Right? But if you can start now, living below your means, it's huge. It puts you so far ahead of everybody else. And let's face it, when you get to retirement, you're going to be living below what you were making when you were working. So you need to get in the practice of doing that. And I know it's easier said than done a lot of times, but that's one of the things that we need to work on.
That's a tough one, but very smart idea. How about tip number 4, Philip?
Well, tip number 4 is structure your savings. So what I mean, so save regularly, even if it's just small amounts. You know, like I said, it's put a little here, put a little there. Ultimately, it will start to grow. And what I have found is as it starts to grow, it starts to kind of snowball. And then you get excited about, oh, let's put a little bit more in there. Oh, let's put a little bit more in there. As you see that number grow and get bigger and bigger, you get excited. And it's like, I don't want to take anything out of there. I'm going to leave it there. I don't want to take anything out of there. So, you know, use the tools you have. If you have a 401k at work, max it out. Get everything the employer is going to give you. If he's matching the first 3%, don't put less than 3% in it. If he's going to match 5%, put every bit that he's going to match into it so you can get the maximum benefit out of it, because that's going to help grow your retirement accounts. And that's the key. I mean, we've got to grow our money. And so we want to make sure that we're making regular commitments to save. And I think today it's easier than when I was growing up, because you can do so much automated stuff now. You can set bank accounts so automatically, you know, so much money comes out of your checking account into your savings account every week or every time you get a paycheck. So I think that one is easier now than what it's ever been. You just have to set it up and do it.
It's nice. You know, we do that. My husband and I, we actually have a bank across town that we put his some of his check into, and it's across town. So it's not easy to get to. So that's one good way that a person could save. Just a little advice for me. All right, we're running through retirement planning tips from real retirees. It's the Statler Financial Radio Show. 863-877-1188. 863-877-1188. Now, Philip, what is tip number 3?
So folks out there are going to say, well, Phil, this really isn't a financial tip. It really is a financial tip in the long run. And tip number 3 is invest in your health. Stay active, eat well, get regular checkups, because here's the deal. Good health makes retirement so much better. And I got to tell you, I know there's a lot of folks out there that they don't like to get up off the couch. They don't like to exercise. They like to eat what they want to eat, and I'm no different than you. Those things are, I like to splurge every now and then and eat a lot of sweets, or, it's a holiday time sometimes and I'll go overboard, but you got to bring yourself back, because man, if you are not healthy, it gets expensive. The amount of medical bills, they start to add up, and the time away from being able to do what you want to do is significant. So do what you can to stay healthy. Be active, because here's the deal. Activity, being active, staying active, always moving, folks, that you just don't realize how many years that will add, not just to your life, but how that will keep you out of that assisted living or out of that nursing home down the road, because you've kept those muscles and you've kept those things moving in the right direction. It just makes life so much better, not just retirement, but life in general so much better. So invest in your health. It will pay you back immensely.
And it makes healing quicker, too, when you get
Absolutely.
sick. So very, very good tips. Let's do number 2 now, Philip. So we're talking about retirement planning tips from real retirees. What is number 2?
Tip number 2 is don't rush into retirement. So you say, and when I'm ready to retire, I'm ready to retire. I get it. But extra time at work, folks, it lets you save more money and plan better, right? So I would rather see you work a couple extra years and know that, hey, I'm set. I've got more than I think I'm going to need in retirement. I've added 2 more years to my Social Security benefit. I mean, there is all kinds of pluses to working a couple more years. And especially, I know this is hard, but especially if you want to retire at 62, I encourage you, I implore you really to run the numbers. Wait at least 3 more years. Wait until you qualify for Medicare. You don't realize what health insurance costs you from 62 to 65. It's the number one reason folks do not retire early. Don't overlook it. Don't rush into retirement. It's going to be there when you're ready. And it definitely works out better in the long run.
Some great tips. All right, you were listening to the Statler Financial Radio Show. You can call Philip and his team at 863-877-1188. That's 863-877-1188 to talk to Philip. And the number 1, let's do number 1 right now for retirement planning tips from real retirees.
So tip number 1 is what you would expect it to be. Start early. Start saving early, even if it's only a small amount, because those small amounts grow over time. Compound interest is your best friend. Starting when you're a teenager or in your 20s, always putting money away and never stealing from yourself will put you way ahead of so many people out there. You would be surprised.
Philip, what about people who have already retired? Maybe they worried they've gotten off course. When is it too late to course correct?
Well, Stephanie, I don't think it's ever, well, I can't say ever. Ever is like never, right? That you just don't ever use those words, because there are times that things come up that you cannot course correct. But generally, there are ways to correct the course you're going. Maybe it's changing the investment portfolio. Maybe you have to reduce the amount of money you're taking out for a little while to let things recuperate. But I think if you're already retired, it makes a lot of sense to sit down with us to make sure that the plan you have in place is the right plan for you, and to take a look at where you are right now and see and make sure that the money you have is going to last the rest of your life. It just makes sense. And again, it's a phone call. It's convenient. It's easy for you to give us a call and let's have a conversation of where you are right now and what are your biggest concerns? What keeps you up at night? What things are really and truly weighing on you and your current retirement? Give us a call at 863-877-1188. That's 863-877-1188. We'd love to talk to you. We'd love to help you. You know, like I said, it's one of my main goals is to help folks have the best retirement they could ever dream of here in Central Florida. And to do that, it means we have to sit down and talk to people. And so we'd love for you to be one of those folks to give us a call. And let's start that process. And let's put a plan in place for you to make sure that you are going to have the retirement you always dreamed of. That number one more time, 863-877-1188.
We have less than a minute, but can you tell us a little bit more about your core retirement design that you offer?
Absolutely, Stephanie. Our core retirement design looks at three key aspects of planning. One is risk analysis. What is your portfolio's risk score? And how does that relate to your risk score? And making sure that they're not too far apart. And it's not unusual that they will be. You know, people that are in retirement, their risk score usually is somewhere in the high 40s, low 50s. And it's not unusual for them to have a portfolio in the 70s. And that doesn't sound like a big difference, but when it comes to risk, that's a big difference. We look at taxes and putting together a tax plan that helps them reduce their overall taxes throughout their lifetime and their beneficiary's lifetime. And then lastly, we make sure we put together an income plan that says, here's how much I can take out of my plan and it will still last me the rest of my life. And that's key, is having that plan and coming back and looking at it on an annual basis to make sure we're still on track. It's that simple, folks. I'd love to help you get started. Give us a call at 863-877-1188. 863-877-1188.
It's been a pleasure, Philip. Thank you.
I've enjoyed it, and I look forward to speaking to everybody next week.
All right, we'll be back next week for more of the Statler Financial Radio Show. Have a good weekend.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.